Hello and welcome back. If you've ever thought about investing in UK property, you'll probably ask yourself a simple question. What type of property actually makes the best rental investment? Not where to buy, not when to buy, but what should you buy? Because property investors are constantly faced with choices. Should you buy residential or commercial? Should you buy off-plan or something that's already built? Is it better to buy one expensive property or several cheaper ones? Should you focus on houses or apartments? And finally, is bigger always better? In this video, I'm going to compare 5 of the most common property investment choices. And by the end, we'll have built what I believe is the ideal rental investment property for 2026. Let's get started. Let's begin with the biggest decision of all: residential or commercial property. Commercial property includes offices, retail units, workshops, and warehouses. Now, traditionally, commercial property offered higher yields, but the market has changed dramatically. Remote working has reduced demand for office space. Online shopping continues to put pressure on high street retailers. Manufacturing remains relatively weak in many parts of the UK. And even warehouse demand has cooled off after the post-pandemic boom. When demand falls, rents come under pressure, vacancies increase, and capital growth becomes harder to achieve. On the other hand, residential property tells a very different story. The UK continues to face a housing shortage. New homes are being built, but not fast enough to keep up with household formation. That means demand remains strong, particularly for affordable housing. So if the goal is stable rental income and long-term growth, residential property wins the first round. Now that you've chosen residential property, the next question is, should you buy something that's already built or invest in an off-plan development? Off-plan properties can seem very attractive. They're brand new. Developers often offer payment plans, and the marketing brochures really look fantastic. But there are some important drawbacks. Prices are often inflated. Many developments come with ongoing costs, such as service charges and ground rents. And because construction isn't complete, there's always a risk of delays. In some cases, developments don't proceed as planned at all. By contrast, an existing property gives you certainty. You can see what you're buying. You know the local rental demand. You can start receiving rent immediately. And there's no construction risk. For investors focused on reliable returns rather than speculation, ready-built property is usually the safer and more profitable choice. Next comes one of the most overlooked decisions in property investing. Should you buy cheaper, affordable properties or premium ones? Now, many investors are attracted to high-end property because it feels prestigious, but investment returns don't always follow prestige. Let's look at a simple example. A premium property might generate double the rent of a cheaper property. Sounds great, but it costs 4 times as much to buy. The maths suddenly look very different. With the same investment budget, you could potentially buy 4 lower cost properties and in total generate almost double the rental income. Affordable properties also tend to have stronger tenant demand because they're accessible to a larger section of the market. They're often more resilient during economic downturns, and they allow investors to build portfolios more quickly without using mortgages. Yes, managing multiple properties can involve more work, but purely from an investment perspective, affordable housing often produces better yields and stronger long-term profit potential. So we've narrowed our research into affordable residential property that's already built. Now comes an important question. Should it be a house or an apartment? The key difference is ownership. Most houses are freehold. You own the building and the land. Most apartments are leasehold. That means ongoing service charges, ground rents, and restrictions imposed by the building owner, who is the freeholder. Those additional costs reduce your net rental returns. Apartments can also be more difficult to sell in some markets, particularly where there is a large supply of similar units. And specialist products such as student pods or hotel room investments often have very limited resale demand and poor growth. And you can get stuck with them. Now, apartments do have advantages. They generally are cheaper to buy and can be easier to maintain. But when considering long-term investment performance, flexibility, and control, freehold houses tend to come out on top. Finally, let's look at size. Is bigger always better? Not necessarily. One of the biggest demographic trends in the UK is that households are becoming smaller. That means demand for smaller homes continues to grow. Smaller houses are often more affordable for tenants. They typically have lower energy costs, and they generally produce higher percentage rental yields. Large houses can certainly work in some locations. In major cities, they can sometimes be converted into HMOs or split into smaller units. But that requires active management, local knowledge, and often significant investment. For passive investors seeking simplicity and consistency, smaller houses are usually the better option and the lower risk. So finally, after comparing all 5 categories, what does our ideal rental property look like? For 2026, the strongest combination is residential, not commercial, already built and income producing, not off plan, affordable rather than premium, freehold houses rather than leasehold apartments, smaller rather than large. In other words, a small, affordable freehold house that is ready to rent today. Of course, every investor's circumstances are different, and there will always be exceptions. But if you're looking for the combination that offers the best balance of yield, demand, flexibility, and long-term growth, that's the formula I'll be focusing on. And whichever property you choose, the real objective should be to own it 100% passively, with no tenant issues, no costs, and no landlord headaches. Own it in a way that the liabilities of the Renters' Rights Act do not apply to you. How can that be done? Please watch the short message from our sponsor on how you can own UK rental property 100% passively with no tenant or maintenance issues or landlord liabilities. Thanks for watching. I'll see you in the next video soon. Freehold houses in the north are the best form of UK property investment. They're affordable, deliver higher rental yields, and are growing at 6% per year. And here's an amazing offer from our sponsor.
Most investors spend £120,000 on one property. This deal gets you 2 houses from our range and effectively get the larger one at less than half price. It also hands you legal ownership of both houses today and delivers over £1,000 net rent every single month. Let that sink in. Same budget, but instead of 1 asset, you get 2 freehold houses registered in your name immediately. Take the 2-bed H2 option, each valued at £86,000. With this amazing offer, the total package price you pay is just £120,000. That's a huge discount of more than £51,000. You enter a rent-free period of 4 years and 4 months, which at first might sound like a drawback, until you realise that the future rent is what's funding the deal and getting you a second property for less than half the normal price. No interest charges, no complex financing, just a clean, structured arrangement. Once that 4-year, 4-month period ends, you're collecting over £12,000 net rent per year. That's a 10% net rental yield of over £1,000 a month after all costs and fees. Nothing more to pay out. For bigger budgets, the 2-bed and 3-bed combo includes our top-of-the-range 3-bed semi-detached house, which we normally sell for £129,000, but you get it for effectively half price at £64,500. With this combo, the net rent amount jumps to over £15,000 annually. Any combination of the 7 eligible property types lands you at roughly 10% net yield. Prices are rising on low-cost, freehold houses in the north by around 6% per year. Our prices are increasing in the summer by £2,000 per property. If you make a reservation this month, we will honour the current price even if completion is after the price increase. Visit Find UK Property and talk to a consultant today.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.